Welcome to this week's weekly analysis. And as much as it is nice to do it on the weekends, it was also nice to do it today because we would combine that with what we expect in the market to do now once the market is open. We'll check into whether there are a couple of gaps. So the first thing we'll do is look at our primary pair, which is Australian dollar, US dollar. Then once we're done with that, we'll go to our secondary pairs, which are Euro, USD, NZD, USD, which we usually often trade together with Australian dollar, USD. And on the extreme end of the highly volatile pairs, we look at GBPJPY. It's a favorite of ours. And if we find an opportunity, we'll actually look at NZD Canadian. So those are our 5 pairs. Our primary pair is usually Australian dollar USD. Then the secondary pairs are EURUSD, NZDUSD, GBPJPY, NZDCAD. This is based on, someone asked me that this is why those pairs. They're particularly based on how they respect structure, how they behave around structure, and how they respect support and resistance. Because that is what our trading strategy basically is based upon. So we'll look into them. Let's do what you call a top down. So this will be as fast as possible. Any questions, either contact us, refer to us, feel free to do so. So I'll hide away the moving averages for now so that we can just look at pure price action. Just read the candles as they are. So it's evident from Australian dollar USD that we are still printing lower highs. Still printing lower highs. Yeah. So we're still in a very interesting downtrend. But something to note, because it is good to note that while you're looking through your currencies, is looking at trendline opportunities. That usually gives you a clear picture of what the market is trying to do. So at the moment, we notice that the market broke this trend line. This is a normal trend line. It's not too steep. It's not too straight. It's just a normal trend line. And remember how we do trend lines. Point A, it's a point of interest. Point B, and to the future. So already broke through it, has come for that retest, 3 weeks down. This is the 4th week. So if this week prints a bullish candle, then we expect some rally up to the next areas, which could be there, and possibly a rally to the top there. Okay, so we already can see what that market is trying to do. It breaks back below the trend line, then we're expecting it to continue to drop to this level. So we expect it to drop to this place again before we can expect a bounce. Okay, so that's the weekly, and let's go down to the daily time frame. Now we're getting into more detail. We've noticed how the week closed last week. It was still slightly bearish. Now this is even clearer based on the trendline opportunity that we saw. We can continue fine-tuning this trendline. Remember not to marry trend lines. Trend lines they're subjective. They're based on what someone is seeing in the market. So don't marry into them. Don't hold them for weeks upon weeks, expecting that they will hold all. At times they are broken. At times they become irrelevant. So we noticed a break of that trend line. Now we're going up. We also noticed something. That the market is printing higher lows. Printing higher highs. So based on what we can see at the moment, this market broke through that area of resistance, respected, then broke through, came back for a retracement. And that is why this was very edgy. Market was quite choppy during this time, and now started printing highs, has come to test this previous high, then has broken above the trend line. We're expecting some nice movement. That's a simple analysis of what we expect through, say, the next week. But if price breaks below this previous area of resistance, of support, then we expect it to come back, then do that. So that's scenario number 2. Remember, we only trade the plan. So if you had planned through and seen through all the scenarios, then it's very easy for you to take that trade. You'll have no hesitation. You'll not be thinking about very many other opportunities or very many other scenarios. Just trading what had already planned. If it does this, I will do this. If it does this, I will do this. So that is where the market is at the moment. So we're expecting it to either continue going up, continue to print even higher lows and higher highs, or break through, retest, and drop. If it breaks through, then this will be a formation of a head, shoulder, pattern. So that's what it means. So if it does that, then we expect that it will drop the full distance of the distance between the neck or the neckline. So if it forms, it actually completes the head and shoulder and breaks through, then you're expecting it to drop well over 140 points, according to 166 points, around that. So that would be the full move of that trade. The market does that. Then if you look at your fibs, you look at your market structure, you also notice that this is a minor structure point. The major structure point is this one. So market can actually come all the way up to this point, then reverse and go down. So we are still, overall, structure-wise, we're still in a bearish market. But technically, we are looking at a break of trend line. Confirmation of that will be the formation of a higher low that will continue to go up. But if now market breaks above this area of structure, above this red box, we are now looking at a totally new trend, totally new market trend based off the daily and the daily. That's where we are at AUDUSD. So we react based on what happens in the market today. So for that, you can either do the 4-hour time frame, which we're able to do moves for the day. So based on that, based on where the market is right now, notice the market has printed an engulfing candle breach. But it already seems to have broken structure of H4. So since this is a retracement, we expect we're looking at a break of structure above that point to be able to be back to the bullish trend of the 4-hour time frame. Same for the 1-hour time frame, because now 1-hour time frame is just much more detailed of what you've already seen on the 4-hour. It's just much more detailed. So this is the zone you're looking at. The market comes back, tests this area, finds resistance, does that last case candle, continues to drop, then we're going to catch that drop down. Now this is the trade for the day, because we're already now in a bearish market. We know overall on the weekly, like we've said, let's write it down. Weekly is bearish, but there is a trend line. Then on the daily, they're bullish. Bullish overall. Market did 100%. On the H4, they're bearish based off the break of structure. Formation. So the H1, bearish, forming the one. That's where we are. That's where we are. So at this point, we are looking at scenario 2, black scenario, where the market is expected to either find resistance where it is, then start dropping all the way down to maybe this particular zone. But for us to measure that, stick your fibs, the market is actually at 38% retracement level. Zoom into that. 38% retracement level. So if it finds a resistance here, prints an engulfing pattern, then we're going to expect that drop to the negative 57. Does an even deeper retracement to the 61 level, expecting it to go to the negative 61 level. So those are the two scenarios that we're looking at. Scenario number 3 would be now the break back into the zone, out through the other side, retest, then continue to go up. So if that will be the case, then we'll look at buying opportunities once the market is back in the zone and is printing higher lows. Yeah. So expect it to go up, retest, go up. So in any scenario, we're looking at what the market is expected to do, then we react to it. So there's one more thing technically that you can find. This is a trendline opportunity. So there is some confluence of me in this down. So there is some confluence to it. So there's some confluence here. 1, 2, third touch. Remember, the third touch confirms the validity of a trend line. So based off that, if the market now finds resistance, creates and prints a reversal candlestick pattern, then we are obviously going to take that. Breaks above, like we've talked about, breaks above, enters back into the zone, tests this area of support, and we're going to buy it up to the end of the zone, top of the zone. That is if you know how to trade the zone. Okay. So enter EURUSD. Enter EURUSD. Let's go back to the weekly. I'm going to take out everything so that we can do a reanalysis of where the market is at the moment. So from what we can see so far, the market is still in a bearish run as well, because printing lows. This is not considered a low. This is actually a zone. Market was zoning between this high. So once it broke out, came back. If we notice, this is a channel. We'll see this very clearly on the daily time frame. This is a channel, so which means market is retracing to a nice sweet spot before it bounces off. So based off the weekly, we're still very wary about what the market is trying to do, because once EURUSD decides to take off, it will take off. That's what we're anticipating. So this channel, we'll see it very nicely on the daily, but it's good to look at that trendline opportunity and see where you are based off the trend lines themselves. Are you in a buy zone? Are you in a sell zone? So at the moment, they've just been testing that trend line. I'm going to make sure it's as accurate as possible. Okay, this is rather in-depth analysis. It's very important that you do that and it's better to do it during the weekends. We already did ours, but it's good also to take you through that. So understand where you are from the weekly time frame, because that usually affects everything else. So based off the weekly, fairly the same as what Australian dollar USD did, printed some bearish candles with a lot of rejection at the top. So we're looking at either continuation of some bearish move based on the fact that it actually didn't break the trend line, just tested it. And then the second thing it did is it tested that area of resistance. So it didn't break. So this area has been tested so many times as support, resistance, printed a double top at that point, came back, tested the same area. So if you go down to the daily, which is very clear, and the best time frame to look at when you're looking at EURUSD. So on the daily time frame, the market tested this area of resistance around this point, broke it, but then got pulled back. And what it did is it printed a double top formation up. So once it did that, market got pushed back down. We're still fighting the fact that this market is in a bullish run in the daily time frame, because based off that area of support, market printed a double bottom, broke above, came back to test, so printed a higher low there compared to this low, compared to this low. So this is the lower low, higher high, because it was higher than this. You need to remember how to name your areas of structure. Tested the high. This was a higher low. A lower low printed, a lower high printed. Then it broke, confirming this double bottom. Broke, printed a higher high, printed a higher low, printed an even higher high, came back to print a higher low around this point, and printed a lower high. So looking at the market as we see it now, there's an opportunity for something very obvious at that point. That's I don't know whether this name is correct to call it a tilted head and shoulder pattern. So what that particularly means is the sellers are taking over the market. And at the moment, what we are expecting, based on the fact that this market printed a joint formation or a reversal candlestick pattern around this area, which broke below the neckline, and you're expecting a retest and a pure drop. That's what we expect. We're expecting a drop of around 140 pips, which is testing this. So, based off structure, based off naked market analysis, no funny business in between. Let me take some of these brushes out. I'm sure we now understand what we are looking at. Based off that, we are expecting the market to retest this area, then melt. Like that's my outlook of the week. I'm expecting that to melt. If the market doesn't do that and actually prints above and tests this area and continues to print higher lows, then above this area, I'll be looking to buy. Above that area, I'll be looking to buy because, and I'll explain that in even much more detail. If I go down to the 4-hour time frame, we notice something. Market came from a high, printed a lower low, printed a lower high, printed a lower low, tested the previous area, then it's going down. So if this market is going to continue with this pattern, this was the break of structure. Once market broke below that, the break of structure was this. So since it broke structure, this was the first lower high based off structure. First lower high, this was the first lower low. First lower high. I was expecting it to print an even lower low, but this will do. Second lower low. So the second lower high is our golden opportunity. Once that happens, usually the market melts like crazy. So that's what we expected. So the market could come back, test this area, come anywhere between here and here. So if you put your fib from the high there to the low here, anywhere between here is a very nice area where market could find an area of resistance, then purely melt. And based on the fact that it's already broken this trend line, we are now in a seller's zone. Yeah, remember, below trend line is a sell zone. Above trend line is a buy zone. So we are already in the seller's zone. So if market finds structure, finds resistance, and now starts falling down, we are on 140 something pips of this market for the week. So let's expect that the market does not have any convergence, does not form any delayed structure, but if it does, that's fine. It still cuts the field. So that's EURUSD according to where it is now. So at the moment it's retracing back to print that lower high, and that's what we're expecting. So we're not trading the counter trend at the moment, because we want to catch that field. So the third pair that we're looking at, NZDUSD. NZDUSD. NZDUSD, this is a very interesting pair. So NZDUSD, let's look at that market based off that area of support and resistance, which was tested all the way, never broken at any point. And once it was broken, it acted as support, as resistance for a triple top. Yeah, tested once, tested twice, tested thrice, then melted. So already now, based off that, we know of structure informing lower highs, forming lower highs, lower lows, lower highs, low, lower high, lower low, lower high. So based off the weekly time frame, just looking at continuous drops. That is now the major market analysis. Just looking for drops. So let's go down to the daily time frame. So based off the daily time frame, we had an inverted head and shoulder pattern here. So we need to confirm if the market actually complete the move, so that we know whether we are back to the trend, or rather to the major trend. So 219 pips, 219 pips. Yeah. So the market completed its move. There's something I hadn't looked at. Is there a trend line opportunity? Is there a trend line opportunity? Yeah. So when the market completed the head and shoulder pattern, look into that. The market actually broke above the trend line. And this was actually expected because this is the first touch, this is the second touch, this is the third touch. After the third touch, the market respects the third touch fully and drops this much. Then on the fourth touch, you usually expect that break. we usually expect that break of the trend line. That's what actually happened. So based off the daily time frame, we are in a buy zone. We are in a buy zone because we are above the trend line. But it's also good. It's also good to look at structure. It's very important to look at structure so that you know, even if you're in a buy zone, how far is the market expected to go before you can actually confirm that now you're in a different trend altogether. So this was a very important. It's a very important area of structure. Change that to blue. It's a very strong area of structure. This based off, this is resistance again, support. So at this point, the market actually reversed. It's expected. So we are already in an uptrend. The low, the higher low. This could be a higher low forming based on whether we find the market continuing to push up. If you used your Fibonacci to understand what the market is doing at the moment, it's within that 23%. So it could drop all the way down to a 38, a 50, a 61 before going up, or could respect this area continue to trickle up all the way to the negative 61. So we are watching the market at the moment based off the 4 hour, based off the 1 hour. The market is in a zone. The market is in a zone. So if you don't know how to trade zones, you'd rather stay out of the market, wait for the market to actually work itself out. Usually mark zones with red, because it means at some point it will break out. When it does, you need to be there. So that's what the market is doing at the moment. It's testing this area of resistance, bouncing off to this area of support. Now it already touched this area once, twice, thrice, once, twice. This third touch isn't as solid, but that third touch could have been a confirmation of, the test of this neckline. So based off the 1 hour time frame, it looks like it has formed an inverted head and shoulder pattern once this completes to that point. If it does, then we're looking at that push bullish. Okay. Usually when based off direction, if AUDUSD is moving up, expect NZDUSD to move up or inverse, because that's what they have. They have that correlation. But that does not mean that you enter immediately. You have to do your analysis also independently, regardless of how one pair is behaving compared to the other. Okay, so that's where we are. We not even go to the 1 hour time frame, because unless you understand how to trade in a zone, this could be very tricky for you, especially if the market is already inside. You never trade a zone when the market is in the middle. It's either when it's on the support area or on the resistance area, so that you have a very small risk, a very high reward. So, and let's jump into NZDCAD before we go to GJ. NZDCAD is well, fairly the same as NZDUSD. The trendline opportunity is that market tested the third touch, melted, crazy. So we're expecting that market to come back now, break this trend line, start forming, either go up to test this previous high or even further. So that's the general minimalistic analysis. Based off the daily time frame, after market printed an engulfing of the weekly, marked by these 4 candles, it zoned in. So this zone is what is very troublesome because didn't complete the retest. Again, this is all in our technical training. Didn't complete the retest, which was up there. So I'll put that as a purple line. So it didn't complete the retest. It's zoned in. We're expecting it to touch that retest area, break it, or touch that retest area, which is minor area of resistance, then drop. Based off that particular time frame, the daily, even the H4 time frame, still in a zone. Touch 1, touch 2, touch 3, touch 1, touch 2, touch 3. Still confirm that this zone is holding for a while. So unless it comes down here or comes up here, we're not going to trade it until that moment in time. And that's it. We're not even going to go down to the 1 hour time frame because it's a zone. Nothing much to it. So let's go to GJ. Start off with the weekly time frame. GJ is one pair that moves and moves and moves and moves. Moves non-stop. Okay, so last week's analysis. This actually happened. Then market zone. So you can get that. I'm not going to delete these areas of support and resistance, just work with them. So based off the weekly time frame, same as all other pairs, I think you call this between 2017 and 2019, market has been rather bearish. So based off the weekly time frame, we're still seeing lower lows, lower highs, lower lows, lower highs, tested highs, then lower low here, came back, formed a lower high. So once it did that, tested the retest area but zoned in. So there's that, I don't know whether we would call it uncertainty, but there's a certain tendency of the market to zone in, especially during January. So we're expecting a break. Once we see that nice break, then we'll be able to trade off these pairs nicely. So yes, zone again, confirmed, first touch, second touch, first touch, second touch. That's a zone already. So this area of resistance, which is the 144.00 area, and this area of support, which is the 141.25 area. That's the area of support. This is the area of resistance. So if you look at GJ, we like looking at GJ from quarter points. Another concept that you need to learn, because it respects these quarter points really well. I'll show you a chart that has quarter points only. Then I'll go down to the 1 hour time frame so you can see how the market behaves around this quarter. So that's basically how a quarter point looks. So the market is always bouncing off this 50-25-00 areas. 500 to 50, 1000 areas. That's in terms of points. So if market prints a reversal pattern around a quarter point area, then you're looking at a nice drop, a nice push bullish. Minimum 30 pips, maximum 100 pips or more, based on how long you're going to hold on to that trade. So like a reversal pattern like this one, engulfing pattern of an area of resistance, of an area of support. I printed this reversal, then went 1, 2, 3, 4, 5, 6, 7, around 7 times 25. Do the quick math. So that's around 185 pips, 175 pips. So yeah, based off what you're looking at in the market. But remember, we are in a zone, very funny zone of the daily time frame. In a zone of the daily time frame. So since the market found resistance again here, started printing lows, we're looking at a continuation of that based off the there's now an area that has a zone inside the actual zone. So even that we're monitoring, we're looking at that continuous drop because you're expecting the market to drop all the way to this trend line before it continues to go up. So continuous monitoring, trading of opportunities every single time. Let's continue to grow. This is not easy, but it's done. It's not hard, it's your psychology. So only trade what you see, don't trade what you think. Don't analyze the market based off what you think. Only analyze the market based off what you're seeing, because that's where you're going to make most of your money. Okay, so that's all for today. Go through this, trade the plan. So trade according to what you've done your analysis on and how your analysis is. Don't jump into different strategies. Just use one strategy, use it in the same concept, wait for the market to form that lower high, that lower low, get that confluence and trade that opportunity. So see you on the next one.